December is quietly one of the best buying months of the entire year. While everyone else is focused on holiday shopping and year-end plans, smart investors are positioning themselves for what's coming in 2026. Why December? Well, three reasons. Tax loss harvesting creates artificial selling pressure, institutional rebalancing creates volatility, and retail investors are distracted. All of this creates temporary dips in quality stocks that won't last long. So today I'm sharing the 6 stocks I'm personally buying this December and holding straight through 2026. And this list has everything: a market dominating giant with an unbeatable moat, an AI powerhouse with a game-changing product launch coming in 2026, a monthly dividend machine building my passive income future, a next-gen digital bank, a deeply undervalued fintech comeback story that I'm buying most heavily right now, and a speculative voice AI moonshot. This is the exact balance of stability, growth, income, value, and intelligent speculation I want heading into 2026. Quick disclaimer, this is not financial advice. I'm just sharing my personal investing strategy. Do your own research and only invest in what matches your goals, your risk tolerance. Let's jump in. Let me start with a simple question. What if I told you that one of the most successful companies on the planet, one with a competitive moat so wide that it's practically unbreachable, it also is trading at a reasonable valuation heading into 2026? That company is Amazon. Here's why this matters. AWS remains one of the most powerful cloud and AI infrastructures in the world. It's not just about storing data anymore. It's about powering the entire AI revolution. Companies building the next generation of AI applications are doing it on Amazon's infrastructure. Meanwhile, Amazon's advertising business continues growing at strong double-digit rates, turning what was once an afterthought into a multi-billion-dollar profit engine. And then there's logistics. The combination of robotics, automation, and their massive delivery network gives Amazon an advantage that nobody else can replicate. The valuation: Amazon trades at a forward price-to-earnings ratio of around 29, which for a company this dominant with this many growth drivers is remarkably reasonable. December often brings volatility as big institutional funds rebalance their portfolios. When Amazon gets hit with those 10 to 15% pullbacks, that's when I add more shares. This remains one of my highest conviction long-term holdings going into 2026. This is a stock I want to own for the next decade. Stock number 2, AMD, the AI beast with a 2026 game changer. AMD is in the strongest competitive position of its entire history. But what has me most excited isn't just what's happening now, it's what's coming in 2026. The MI400 series. This is AMD's next generation AI accelerator launching in 2026. AMD says the MI400 will double the computing power compared to their current MI350 series. AMD is also launching something called the Helios Rack System, a fully integrated AI infrastructure solution that can connect dozens of these MI400 chips together in a single rack. This is rack scale AI computing, and it's designed to compete directly with NVIDIA's highest end systems. The data center business has already been posting very strong growth, double-digit increases overall, and even triple-digit growth in the same product categories. But the MI400 launch could be the catalyst that takes AMD's data center business to an entirely new level in 2026. I built my AMD position heavily throughout 2025, so now I'm only adding during meaningful pullbacks, typically 15 to 20% dips when broader AI stocks get sold off. But this is a long-term hold for me. I plan to hold AMD for a minimum the next 3 to 5 years. Stock number 3, Realty Income, the monthly dividend snowball. Now let's talk about stability and the passive income stream I'm intentionally building for my future. Realty Income, ticker O, is one of the best monthly dividend payers in the world, and it isn't a stock, it's a REIT, a real estate investment trust. And I'm not buying it for quick gains, I'm buying it to create a second income stream that compounds over decades. Most dividend stocks pay quarterly. Realty Income pays you every single month, 12 paychecks per year. That consistency is powerful when you're reinvesting those dividends. Realty Income owns over 15,000 commercial properties with strong long-term tenants. Rent is predictable, cash flow is predictable, and they've been increasing their dividend for over 30 consecutive years. The key metric for REITs is AFFO, adjusted funds from operations. That's the actual cash flow engine supporting the dividend. Realty Income has one of the most consistent AFFO growth profiles in the entire REIT sector, with growth around 4 to 5% annually. This pairs beautifully with my SCHD position. SCHD is my backbone for quarterly dividends. Realty Income is my monthly paycheck builder. I buy Realty Income on pullbacks of 5 to 10%, reinvest every dividend, and let that future monthly income stream compound for decades. Stock number 4, SoFi Technologies, the bank built for 2030, not 1990. Here's the reality. Younger consumers don't want what traditional banks are offering. They don't want outdated physical branches. They don't want slow bank transfers. They don't want hidden fees buried in the fine print. They want speed, they want automation, they want transparency, and they want everything in one modern, intuitive ecosystem. That's exactly what SoFi delivers, and that's why it's winning. SoFi has grown to over 12.6 million members, up roughly 35% year over year, and members keep adding more products over time. Members aren't just signing up for one product anymore. They're using checking, savings, investing, loans, credit cards, and even crypto investing, all within the same platform. Deposits continue growing, loan demand is strong, fee-based revenue is expanding, and profitability keeps improving every quarter. Now, yes, SoFi trades at a much higher forward price to earnings ratio than traditional banks, but that's because it isn't a traditional bank. This is a modern fintech platform built for the next generation of consumers. When legacy banks were still figuring out mobile apps, SoFi was already building an entire financial ecosystem. That's a massive competitive advantage. I personally don't chase SoFi on green days. I wait for fear. I wait for 10 to 20% pullbacks, and I scale in slowly with small position sizes. This is a multi-year bet on the future of banking, and I'm holding it with conviction into 2026 and beyond. Now for the deep value contrarian play, and full transparency, this is the stock I'm buying most heavily right now. It's PayPal, ticker PYPL. It's quietly one of the most undervalued large cap fintech stocks in the entire market. This company generates billions in free cash flow. It's deeply profitable. It's buying back tens of billions of dollars of its own stock, and yet it trades at around 10 to 11 times forward earnings. Let me say that again. One of the most profitable cash-generating fintechs in the world is trading at 10 to 11 times forward earnings. That's cheaper than many traditional value stocks. That's cheaper than utilities. That valuation is absolutely absurd for a company with this much cash flow. So what happened? The market narrative turned negative. Growth slowed, the stock got beaten down, and now it's sitting on the clearance rack. But here's what's changing. Venmo growth is stabilizing. Braintree continues winning major enterprise deals. The new CEO is laser focused on improving margins, and PayPal is stepping directly into two massive long-term catalysts: open banking infrastructure and stablecoin payments. I remember when PayPal was the hottest stock in fintech. Now it's basically forgotten, and that's exactly why I'm buying it aggressively. And finally, the wild card, SoundHound AI, ticker SOUN. It's my speculative play for December. They specialize in voice AI technology used in cars, restaurants, smart devices, and customer service systems. These are real deployed products generating real revenue. Revenue growth has been explosive, up over 60% year over year in recent quarters. They've landed partnerships with major automakers, restaurant chains, and enterprise clients. Some investors compare SoundHound to very early stage Palantir, not because the businesses are identical, but because both sit at the intersection of cutting edge AI technology and real commercial adoption. But let me be extremely clear. This is volatile. This is speculative. This stock can swing 20, 30, even 40% in days or weeks. That's why I keep SoundHound a very small position in my portfolio. This is not a core holding. This is a calculated lottery ticket with asymmetric upside if voice AI becomes as big as I think it will. I only buy SoundHound during deep pullbacks of 25 to 40% when fear is highest. I dollar cost average in slowly, and I hold it understanding it could either 5 times or go to 0. 2026 is right around the corner, and the investors who win big won't be the ones reacting to daily headlines. They'll be the ones who quietly built positions during December when everyone else was distracted. If you want to see exactly how I'm sizing these positions and what I'm buying next, be sure to subscribe. And if you're not sure what to watch next, check out another one of my videos right here that I think you will really enjoy. Take care, and I will see you next time.